Hi, this is Mike Smella, and I've got one real easy question for you. Is your house paid for? I've been a mortgage and financial professional for 18 years, and a little over a year ago, I had 26 and a half years left to pay on my first mortgage, and I also owed $93,000 on a line of credit. Really had no way to pay things off until I learned about this new system. Just to give you a little bit of my story, when I ran my numbers and looked at this information, this new information that we're going to expose you to today, I went from 26 and a half years on my mortgage to right now I'm going to be paying my mortgage off without refinancing, without changing anything I do on a monthly basis, and without changing my lifestyle. I'm scheduled to pay my house off in 11.1 years. Now I know this kind of sounds too good to be true, and it did to me at first too. But one of the things that I quickly found out is that with different information, we can lead to very dramatic different results. Now, if you're looking to pay your mortgage off, to get out of debt, there is a way that you can do it. And one of the things that we talk about and that we teach people about is that before we can learn about a new system, one of the things we need to look at is what is our existing system and how is our existing system of banking, borrowing money, and paying money back truly designed to keep us in ouch. Now, one of the things we need to look at is we've always been taught to take our money that we work very hard for and take our money and put it into a checking account. Now, if most people go out and take a look at their last 3 months' bank statements, what they're going to see is something like this. They may be depositing whatever, $3,000, $4,000, $5,000, $10,000 a month into their checking account, and at the end of the month they get their statement, and they have earned very little, if any, interest at all. Now the question becomes this: do you think that the bank has made money on your money? Well, of course it has. The reason is, banks make money on our money. Banks don't make money on their money. So one of the things we look at is we say, what if we were able to turn the tables? What if we were able to use an existing banking system or existing banking tool that let us have access to our monies via checks, via online credit or online bill pay, yet we were able to only pay the banks a little bit of interest, and we were able to get a big benefit. To me, that would make a lot more sense, and it actually does. The second thing we look at is how we've always been taught to borrow money and pay money back. Now, when you're looking to buy a house, if you're going to buy a $200,000 house, most people don't have the cash to buy the house. So we need to go to a bank or a lender and ask for a loan. Well, usually when we borrow, take a mortgage out, we're going to put very little, if anything, down. And what we've always been taught is, what is my interest rate and what are my payments? Well, the challenge becomes is that if we take out, let's say, a $200,000 mortgage at 6% for 30 years, the reality of that 30-year mortgage is over a 30-year period of time, we're going to borrow $200,000. We're going to actually pay back $431,000. So over a 30-year period of time, if we don't refinance, if we don't sell our house and buy a new house, if we just kept that mortgage for a full 30 years, we're going to pay back $200,000 of what we borrowed, and we're going to pay the bank back $231,000. So in essence, we're borrowing twice as much as what we originally borrowed. So the question becomes, where does that 6% interest rate fall into play? Well, it really doesn't. On a normal 30-year mortgage, the cost of our money, or the actual interest rate that we end up paying with the dollars out of our pocket, ends up being somewhere above 115% interest. But the reason that we've always been taught this is because the banks, on an amortization schedule, will show us that every month, at the end of the month, they're going to charge us interest on that month-end balance. So we're led to believe that we've got a real good 6% interest rate, yet if we're paying, let's say, $1,200 out of our pocket, if $200 is going to principal and $1,000 is going to interest, where does that come out to a 6% interest rate. So again, the bank's math may be a little fuzzy math, but it's what we've been led to believe. So on one hand, we're taught to take our hard-earned money, put it into a bank account that we have access to, but where the bank makes a heck of a lot more money on it than we do. On the other side, we're taught to borrow money from the bank and pay it back according to their schedule, not according to our schedule, which again is front-loaded with interest, so that ultimately we end up paying back twice as much as what we borrowed. So we've got our money being taken from us on one side, we've got our money being taken from us on the other side. We've been educated and become accustomed to using this or thinking of this as normal, and ultimately what ends up happening is we end up getting into and stay involved in a system that is truly designed to keep us in debt. Well, what I found and what we learned through this new system is that we can take the tables and take the rule book away from the bank and put it back in our favor, so that we can utilize not only our own money, but we can actually utilize the bank's money and the bank's rules and the bank's tools to actually show us how to pay back the bank's money on an amortized loan much more rapidly, thereby increasing or decreasing the time that we are in debt and increasing our ability to create wealth and get out of debt. Sounds a little weird, sounds a little different, but at the same time it really works. One of the things that we want to hold on to that thought, I just lost my train of thought.
All right. See how good this video is going to be. There's so much background noise, but it's it's just
anyway, it's a starting point. All right, so we've got to, again, when we look at the system that we're using right now, we can take the existing banking tools, and we're going to flip it around so that we're going to use it in our favor. So there's really three components to what we're working with our system. One of the components is, again, we want to get rid of our mortgage. You'd be surprised, and we can show mathematically that it makes more sense for people to get out of debt, and it actually is a much greater return on monies to cancel debt than it is that most people can invest the money in. So we can show people that we can get them out of debt very, very rapidly. One of the great parts about this program is that you don't have to refinance your existing mortgage. Again, in my situation, we didn't refinance our mortgage. We're not changing our monthly mortgage payment. In 1 year, the first year on the program, I paid my equity line of credit down over $14,000 strictly by changing the system. It works. One of the great ways to see if this will work for you is to simply gather some information, fill out the form listed below. There's basic information we need. We don't need Social Security numbers. We don't need any account numbers. This is something that we want to be able to show people, will it work for you? This isn't going to work for everybody, but for the people that it works for, this works exceptionally well. There are currently tens of thousands of homeowners throughout the United States that have been using this system and are seeing dramatically different results. And eventually they're going to get to a point where they're going to be mortgage and debt free in a fraction of the time. So please feel free, on the list below, put your information together, or complete the form. Again, there's no obligation. One of the members of our team will contact you to answer some questions to see whether this system and this program will work for you. Again, after all, what have we got to lose other than years off our mortgage payment?